start. So let me kick it off. I am Adriana Zaluka with FOTechHub, and this is the summer edition of the Larry Krauss Family Office Tech-NEW-logy program with Litania Hav, founder of Vyzer, Dean Palmiter, founder of Asseta AI, and Cori Rodda, who will be interviewing Litan and Dean. She is the owner of FWO Accounting. So we have a number of new folks here today. So just to remind, this program is part of a virtual series that spotlights innovative tech solutions for modern family offices through founder interviews. It runs under the banner of Larry Krauss Family Office Tech-NEW-logy Institute, founded by Phil Strassler 4 years ago, and FOTechHub are proud collaborators. Now, Phil is with us, as you can see. Before I hand over to him, just a couple of housekeeping points. Any questions, please put them in the chat on your right, in the panel on your right-hand side. And if you'd like to connect with Litan or Dean or Cori, email me at adriana@fotechhub.com. And lastly, please mark your calendars 18-19 November for our flagship annual conference. It's also held virtually on the same platform. So that's it from me, and over to you, Phil. Thank you.
Thank you so much, Adriana. I'd like to introduce our panel moderator, Cori Rodda. She's the founder and president of FWO Accounting and Consulting, which is a premier family office outsourced solution. Cori and her team provide complete tech and operations service offering. And in fact, I've worked with Cori for the past 3 years on one of my single family office clients. Her company is incredible, service first. Cori, take it away.
Thanks, Phil. I'm honored to be here today. I'm excited to be here with Litan and Dean, and we are going to talk about some exciting new companies that are out. But first off, I will let Dean and Litan give their bio on their own, and then I will give kind of a brief overview of how we're going to kind of conduct the questions. So I'll start with Dean, if you want to kind of introduce yourself and about Asseta AI.
Sure, thank you. Hi, everyone. Thanks so much for having me. I'm Dean Palmiter, founder and CEO of Asseta AI. Started the company in January 2023, but I've been helping family offices for close to a decade between my time at Oracle NetSuite and Sage Intacct, where I built out the family office practice there.
I guess it's over to me.
Yes.
All right. All right. Hey, everyone. I'm Litania Hav. Excited to be here. I'm one of the co-founders and CEO of Vyzer, and we're a wealth management platform for high net worth individuals and family offices, pulling data from any source to create a single source of truth that works for you. Full back office, full front office solutions for family offices and high net worth individuals.
Great, thank you. Okay, so for today's panel, we kind of like two companies, and we want to learn all about what they have to offer and how they can help the family office space. So what kind of generated my questions and kind of categories? So we're going to talk about the company and kind of the client overview of how that works. Then we're going to talk about technology and some of the capabilities that the companies offer, and then we'll move on to the vision and future outlook. As Adriana said, if anybody has any questions, please make sure to put them in the chat. I'll keep an eye on it and make sure that we kind of get everyone's questions answered. We only have an hour, so all the questions will be, we'll try to get through as many questions as we can so everyone gets to learn about these two great companies that are out on the market. Okay, so just as far as like company overview, and we'll just go back and forth between Dean and Litan and see, let you guys kind of answer. So the first question I wanted to ask is, in this space with new technologies coming out all the time, what was the gap in the wealth management space that led to the creation of your platform, and how is your solution uniquely positioned to address it? We can start with Litan.
Sure, fair enough. If we start with Dean before, I'll start with this one. So the gap in the market, we did not start Vyzer because of a gap that we identified. We just started for us. We sold a company, a startup 10 years ago, made some money, been investing across the board for the past decade, me and my co-founder, then needed to build a platform for us to serve as our type of administrative family office in a sense. So pull data from any source of truth, private, public, insurance, cash, whatever it is, and create a very intuitive and easy to understand interface for us to understand what we have. And then it evolved from there into be Vyzer as it is today, because a lot of people around us wanted access to our platform. And then it just grew from there into, thousands of users and tens of billions of assets tracked, and, AI on our back end and AI on our front end to obviously level that up. And this was pre-open AI, but also afterward we would evolve more. But that's like the premise of what brought us to build the platform. And we're like a blend between a lot of softwares in the market, because we built this to serve as the alternative for all of them, with a very intuitive interface. I like to say we're like a blend between an Adapar, a Canoe or an Arch, a Mirador with an experience of an iPhone. So that's sort of where we come from.
That's a good summary. I like that.
Okay.
All right, Dean, how about for Asseta?
My clients pulled this product out of me. So at Sage, I had helped over 70 single family offices migrate off of mom and pop accounting softwares like QuickBooks. Most family offices are still using QuickBooks, and they're not even on the cloud version. They're on the desktop version. And family offices have a lot of legal entities. They're always adding more. So the wedge that we're filling is this huge gap between the mom and pop accounting softwares like QuickBooks, which are single entity and lack dimensionality, and then the high-end enterprise resource planning systems like Oracle NetSuite, Sage Intacct aren't really purpose-built for family offices. So they offer a full suite, but really for a general business that has things like inventory and supply chains and warehouses. And family offices are unique in that they have a lot of legal entities, but they don't have customers necessarily. They don't have inventory. They're not assembling widgets. They just want a really good GL. So that's where we came in. We've wedged this gap, and we were founded just after ChatGPT. So I saw this new wave where we went from mainframe or desktop solutions like QuickBooks Desktop, which are not cloud-based, the migration from mainframe to cloud, and now there's a migration from cloud to AI native. So we'll talk, I'm sure, more about AI, but we saw this as a wave. But I've been thinking about this idea for more than just the last 3 years. As I mentioned, it was really pulled out of me based on the feedback that I was getting from my clients at Sage was, why does it take 6 months to implement? Why does it cost 6 figures? Why don't you do things like partial ownership or investments performance or custodial brokerage integration? So all of that feedback just kept coming to me.
You just kept growing. Right. So as we know, at the family office, there's a lot of stakeholders, and there's a lot of information, a lot of fires to put out, a lot of things, and with that comes reporting and whatnot, and tracking, the accounting book of records, investment book of records, tax book of records, investment book of records, all those. So where would you say, Dean, that Asseta AI falls in that grouping of like book of records?
Sure. So first and foremost, we knew we had to build a multi-entity system, and we knew it needed to be multi-dimensional. And what I mean by that is systems like QuickBooks, they give you class and location. ERP systems like NetSuite, vendor, employee, customer, project. We take a user-defined custom dimension approach where families can have family member, generation, asset class as these custom reporting dimensions. So they can slice and dice their balance sheets and their income statements, their statement of cash flow, by entity, by asset class, by family member. That's really powerful for them. And then thirdly, Cori, what you were mentioning was this idea of the difference between tax or cost basis or GAAP set of books, and then other types of books like management book or investment performance book. So this concept of multi-book, the ability to have multiple sets of books, because what the banks care about or what the IRS cares about is very different from what the matriarch or the patriarch care about, which is, what are my assets worth? So you have to be able to have multiple sets of books. So those are three of the key pillars.
Gotcha. And how about, LaTanya, how about for Vyzer? Where would you kind of categorize Vyzer in kind of those like books of record?
Yeah, it's a great question. I mean, for us, because we didn't build this as an accounting software or as a software built for the financial professional industry, it's that we don't fit in any of those like boxes.
Okay.
We touch all of them to some extent. give very powerful back end functionality of analyzing information, consolidating information, and then building on top of that a very intuitive interface to be able to analyze that information. So it could be the investment book of record, it could be the cash flow, it could be the accounting to some extent. But the idea is to pull data from any source. Again, it could be through API, but it could also be through a portal that's offline. It could be through a document or an email. And we have our own back office team, and we have our own AI that supports it. We like to think about it as we have AI agents and human agents that work together and synchronize efforts to create that single source of truth that's constantly living. And it's across all aspects of a financial life of a family. But in a very simple way to understand it, because at the end of the day, wealth owners like us, like me, I don't understand all those financial terms. Like I don't even show it. Give me the bottom line of like I need something at the in an app so I can ask a question or I can touch a button and see what happens in a very simplistic kind of way, but also to be the ability to drill down to the very granular level of a holding, an asset, slicing and dicing it, and yeah, that's sort of the way we cover the financial landscape for the families that we serve.
Gotcha. So your goal is to slice and dice the data any way you want it, to analyze it and give you the like simplistic output that you're looking for.
Well, the output, there's a really interesting, because we do not come from the financial industry, there's a lot of these terminologies that come up. People ask us, well, what kind of reports do you guys generate? And I think that's such an old way of looking at the world. Like it's any report you want. I mean, you have two ways to interact with data. One of them is the regular user interface people are used to, clicking buttons, going down, drilling down, seeing graphs and stuff. But we also have another way to look at your data, which is just interacting with it like a ChatGPT style. You have an AI module on top of your data. It pulls in market data, and you can ask it anything you want. So if you're advising a client, you can ask it. If you're the client itself, you can ask it. So you can essentially have that endless dynamic reports at your fingertips. And so I kind of think the whole terminology, the whole industry is getting flipped upside down to a lot more native than it is more structured like it's been used to. We can accommodate both, but I think, you have to look at in those two manners at the financial world.
That's a good concept of making it more quite kind of interactive. I think, Dean, I think you've talked about that as well, that Asseta is very more like interactive too, kind of how, you look at the data and how it's coming in and how you incorporate it. Do you want to expand on that a little bit as well?
I would say that we're not expecting family offices or accountants to change the way that they work. We view AI as a force multiplier. So things like reconciliations, categorization of transactions, data ingestion from documents, data validation, so detecting anomalies. That is the way in which AI can really enhance the workflows of accountants. So there's many aspects within the accounting function, and beyond surfacing insights, it's automating these key, tedious, error-prone, time-consuming tasks that make a family office unscalable. So instead of hiring your third, fourth, and fifth accountant, using a tool, laying a foundation that's scalable, and then using AI as a force multiplier can keep your team lean and efficient.
Okay. So with AI, which is a big concept, and we'll go into that a little bit, but just like, a big word on the street right now is the AI and how it's kind of changing this whole financial landscape. But kind of behind that is something that I feel like a lot of families are very concerned about is security, right? Security and making sure that their data is protected and that it's not going to get leaked out. So how do you, and I'll start with Dean on this question. So how do you ensure that your data and privacy is protected for these clients?
First and foremost, picking AI partners that value security and privacy. We knew that going into this market, family offices, their top priority above everything, including making more money, is their privacy, their security. And this is a long game. You can't just come into this market and make a big splash without building up a reputation over years. So it's one of those things where trust is built over decades and reputations can be ruined overnight. So our thought process was we need to be SOC 2 Type 2 compliant. That is the highest level of security compliance that an accounting software can achieve. So SOC 2 Type 2, and then we use bank grade encryption, so AES 256, so that the data is secure at rest and in transit. So picking an AI partner, you can't just go willy-nilly and pick a model that's going to be feeding data to a third party in training models. It has to be used securely, privately, on their own data in an enclosed environment to make sure that we keep our SOC 2 Type 2 compliance. So obviously, if you don't have the trust of your clients, you're not going to have a good business. And it's especially true in this space.
In this space. All right, Latan, how do you feel about data security and privacy?
First, I 100% agree with everything Dean said. More of the same methods, because it's table stakes at the moment. And it's really important for people to understand, just as business owners, for us, we serve a lot of clients, and it's so much more dangerous for us to have a security breach than it is for any individual client. I mean, we don't move money, we don't touch money, we don't have access to any of that, right? I'm not downplaying the importance of privacy or security for each individual client. I'm just saying, if we have any type of security or privacy breach, it's the end of our business. Like, that's it, game over, right? And so we do everything possible and beyond to ensure privacy and security across the board. Yeah, it's all these words of and we also, obviously, we use the same thing, like bank grade security and encryption at rest and transit, and in all the SOC 2 compliance stuff and GDPR and PII and all these really big words. But the fundamental aspect of it is we all have to go above and beyond to ensure the security and privacy of our clients. Like, we didn't even launch. So our background, again, I didn't give this, but I'm Israeli. I just moved here last year, and my whole team is like ex-military. Like, for us, we didn't even launch the product before we were sure this is like secure and private, because it is a game for us of like life and death security and privacy. And so we just went above and beyond. That might sound like some cliche, but it is so extreme. It's an important question to ask. We pay people, and I'm sure Dean does the same. We pay companies to try and hack us. They're called penetration tests, just to ensure those types of levels. And that's like also table stakes. Like, you cannot be in this industry if you don't do those basic fundamental aspects of security and privacy. And just also, we don't have access to any data. Even if there is AI in the loop, the data that's sent to the AI is PII. There's no PII information on it. And they obviously don't train on it. But yeah, it's a very important question. It's just table stakes in the game that we're in to ensure the highest level of it.
Okay, awesome. Okay, so we'll kind of transfer to a little bit more about like the client profile and company background. So if both of you could just kind of expand on how many clients you have right now, how much staff, and then what would you say is like your perfect client profile if you were to come across a new one that the best fit on your software. So we can start with Dean.
So my ideal client, I guess my typical client, has anywhere between 150 million to 3 billion of assets under management. And we have 9 full-time employees today, covering engineering, customer success, operations. We're really focused on our service and to ensure a high level of touch and white glove concierge level service. We're definitely not the cheapest solution in the marketplace, and we're not a cost cutting type of solution, but we are actually cost effective and actually very competitive, even against QuickBooks in some instances where they have many legal entities. QuickBooks can get very expensive very fast, and so can NetSuite and Sage. So I would say our average client today is spending about 30 grand a year. We have increased our prices a couple of times just to make sure that we're maintaining that high employee to customer ratio. and providing the service that these families, these clients expect. So while our ideal client typically has over 150 million, we have a couple in the 50 to 100 million range too.
What would you say for about how many entities that they have?
We have one client who has over 100 JP Morgan Chase accounts and over 60 legal entities. Families are coming to us with as little as a dozen legal entities and as many as 450.
Gotcha. So what about needs like FX or just various investment types, things like that? Does that play a role at all?
We support multi-currency, so over 170 different currencies, and we can pull in real-time rates from the likes of Visa, Oanda.com, but our users can also enter their own rates, so they can upload their own rate tables, they can override rates, and they can transact and also report in multiple currencies. So we have some clients who have entities across multiple states, so therefore those entities have different base functional currencies, but they consolidate back to the US or back to Canada, whatever their native currency is.
How many clients do you have?
Sorry, we have 20 paying customers today, which represent over 30 households.
30 households. Okay, great. And then before we get to Latan, you talked about pricing a little bit. So how do you determine your pricing? Is it based on AUM, on entities, on investments?
Is that a question for Latan or me?
For you, for Dean. Yeah, we'll just finish with Dean and then we'll go.
So every client's unique. There's the billionaire who has 3 entities. There's the guy worth 70 million who has 100. So complexity comes in all different forms. You know, some clients have a desire to be charged by entity or not be charged by AUM. So it's really about, for us, the level of complexity. So I would say it could be anything from like, what other systems do we need to integrate with? Are they international? Do they have dozens of users? So it's not a one size fits all, and it's about really how much value can we deliver. So as I mentioned, we're charging 30, 40 grand a year. It's really about meeting the client where they are and putting a foundation in place that's scalable from a system, and solving their problems too, their challenges, because there has to be a huge ROI for them. This has to be better than the alternative, which is hiring a staff member for 150 or 250K. So 30, 40 grand is nothing when you can provide a ton of value and put in a scalable foundation. And our clients who join us today are getting grandfathered in for 10 years at that price point. So as we continue to deliver more enhancements, more modules, all of our customers benefit from those releases at that same price point.
So 10 years is a long time. So while we still have Dean on, there's a question that came in. Ken wants to know, do you work with multifamily offices as well as single family offices?
We do. So as mentioned, we have 20 individual customers paying today that represent, I would say, maybe even more than 40 households. So we have a couple of multifamily offices in the mix, including some that are signing this month, that represent usually anywhere between a dozen or 20 families.
Okay, good. Okay, all right, Latan, I know there's a lot of questions kind of wrapped up there that we went through with Dean, but kind of a similar, background, if you want, like company, how many clients you have, and then just what would you describe as like the perfect client for your setup?
Sure, yeah. So we're a SaaS platform. So we have freemium model, and we have about 10,000 users in our platform, about 500 paying clients. And our pricing is, because it's freemium, it's anywhere between free to test it, play around, and $1,700 up to $9,500 a year. And that's for the single individual families. And we also have another offering that we launched a couple months ago, which is a multifamily office advisor offering, which is it's a white label version with more functionality built for multifamily offices and advisory firms And that ranges from 15 to 50,000 a year, depending on how many clients they have. And we're building out a whole another AI co-pilot for that type of industry as well. That's sort of like we have these two lines of business, B2C and B2B, high net worth family, small family offices, and the B2B is a more multifamily advisory offering. The ideal client on the B2C side, so our average client on the B2C side is worth 18 million, but we don't really look at it from a net worth perspective. We will look at it more from a complexity standpoint. I think Dean mentioned that as well. We have clients, I've spoken with people that are worth 150 million and don't have that much complexity because they don't have a lot of entities. They don't have a lot of private investments, which is where the complexity is derived from usually. And I've spoken with people who have 5 million net worth and you've never seen a spreadsheet so complex in your life. It's insane. And so it really depends on the complexity. We started the company building on the complexity in the private world because that's sort of where documents flow in and out, cash flow flows in and out. It's more opaque and hard to manage and track. The publics are more like, they're more a commodity to track. Everyone can track public market holdings. We have that as well, of course, but because that's where we built the foundation on the privates, that's sort of where we strive. And that's where the complexity that we solve really, really well. And so our ICP, or ideal client profile, I'd say is people that have at least 10 private investments, because we pull data from the investor portals, from the documents, the emails. We identify cash flows and reconcile those and connect them to the actual assets. So if a family's expecting distribution from a fund, we identify it in the bank, but also cross-reference what the portal's reporting, and then raise a flag. Hey, listen, what they said that you're going to get isn't what you're getting because they made a mistake or whatever. Reach out to the fund, click a button here, like that type of insight. On top of projecting cash flows based on all those underlying assets and liabilities that people have. So that usually is relevant for people that have those complexities. And yeah, I mean, we've seen clients with spreadsheets with 1,000 line items, and we've seen clients with a lot less that are worth more. But our ideal is at least 10 private investments on the B2C side, and on the net worth side, our average is 18 million. On the B2B side, sort of MFO RIA world, it's more people who serve that client base, right? So if you're an advisor and you serve families who have those types of complexities, you're probably leaning on a bunch of different tech stacks and manual operation solutions to serve them. And that's where our tech comes in and levels them up, empowers them, multiplies their team to serve their clients better and to serve more clients at scale.
Okay, so we have, thank you. We've got several questions coming in right now. So kind of figure this. So, Phil asked a question about historical transition data. So can you both kind of expand on how do you work with that historical data going from other systems onto your platforms? I'll start with, Dean, you can start.
Directed at me, Phil, thank you for the question. For QuickBooks Online, we actually have an integration and we can suck up all the data pretty easily. So, and then other systems, doesn't matter. We can ingest as much data as you like. So really easy actually for us to bring in multiple years of data. We provide that service to our clients. They have to help us a little bit, get us their chart of accounts, get us trial balances. And, usually 3 years is the standard. Any more than that, they can archive their data in QuickBooks. But they can bring in as many years of historical data, whether that's summarized month over month or quarterly data, or they could bring in the detail as well. There's no limitation to our system. And once you have the chart of accounts and your entity set up, bringing in data is not difficult.
Gotcha. Latan, do you have any issues with bringing in historical data?
Well, I think people don't understand the importance of pulling in their historical data because performance is based on that. And so we do work hard on, trying to convince our clients, hey, give us as much data as you have. We have what we call our vault or vault AIs. You just throw any document into it, translate it into data. And so it could be historic data for as long as you want, and we'll just pull that in and then update and create assets or liabilities based on it. So from any software, any spreadsheet, whatever it is.
Yeah. How about any, so for Dean, there's a question on partnership accounting, and we'll kind of get to some of those capabilities here in just a minute. But while we're still on this kind of topic of like bringing in data and workflows, do either of, how flexibility do you have with bringing in APIs for custom workflows from other systems? And Latan, you can start.
So in terms of adding new APIs, is that the question?
Yeah, like how much flexibility do APIs offer for custom workflows?
Yeah, I'm still not sure I really understand the question. But the idea is because we do have our own APIs, and we also have our own third-party integrations like Plaid, Akoya, and Saltage, and some others that we use to pull data from all these institutions. We're adding more, like every quarter, there's more and more institutions being added and more aggregators that we're working on our roadmap. And if there's a specific API that we need to connect with, it depends on the scope and on the client, and how many clients are being affected by that. Then we'll go and implement that as well. If I understand the question correctly, Dee, maybe you understand it better than I did.
It's everything that we do. We're an API first architecture. So we support direct feeds, flat file ingestion, SFTP transfers. We integrate to custodians, portfolio systems, banks, and other applications as well. Everything from expense management, CRMs, tools like Bill.com and Ramp, and so API native, really easy to integrate with other systems, pulling in data and even pushing data, full ownership of your data, and ease of which you can integrate and build a best-in-class platform.
Gotcha. Okay. All right. It's helpful. All right. So kind of moving on to the next kind of like set of like implementation, right? So Amy's asked
you asked about partnership accounting though. Sorry.
Oh, yes, in partnership accounting.
So this was one of those things that was pulled out of me from my Sage Intacct experience was, Dean, we own entities. Sometimes we own entities 50-50 or 49-51, or we own a 5% or a 10%, a minority stake in an entity. Or I do real estate deals with my brother or my cousin. So the ability for you to track your ownership across your entities is really important for these families. And being able to do that native without bolt-ons. When I was at Sage, I was telling my leadership team, if we do partnership accounting, family offices would pay hundreds of thousands of dollars a year. And I was asking for multiple years, and I was always told, it's coming. And I just couldn't wait any longer. And that's a big catalyst for why I started Asseta. So the ability to natively track your percent ownership across all of your legal entities, that's the combination of the dimensionality and the multi-entity capability, is to be able to assign family members to an entity, track their ownership over time, be able to allocate revenue and expenses, but also this concept of a multi-tiered roll-up where you have like a wedding cake or a nesting, like a Russian nesting doll structure where you have subsidiaries that roll into subsidiaries, which roll into a parent company. And that can go sometimes 5 or 6 layers deep or more. So that is something we're pretty proud of that differentiates us from a platform like a NetSuite or a Sage.
Gotcha. And on that concept, can you look through all those levels then?
Yeah, you can drill down all the way to the bottom level. And then you could, look at it from the second or third level. And you can group your entities and you can layer on, like, say, okay, I only want to see my entities and I only want to see my share of my entities. So you can layer on those views to be able to have visibility at all the way down at the bottom of the tiers, and by the family member. So it's very flexible from that perspective on how it gets set up and how it can be used to get you the information that you need.
Gotcha. Okay. So, and then what would you say, and I'll just stick with Dean and then we'll go to Latan. What's your typical implementation timeline for a new client?
Yeah, sure. So our competitors like NetSuite and even like systems like Eaton Solutions take 6, 12, or sometimes more longer. And it involves hiring large consulting teams and spending 6 figures Our implementation, I'm not going to sugarcoat it. We can set you up and get you access in 2 days. But this is a partnership. And ideally, this partnership is not even for 1 decade, it's for multiple decades. So our families, they're not like venture-backed startups. They're not aiming to get live in an instant. They're looking to lay a foundation. And that's what they value when they come to us, is working with experts who can lay that foundation. So if it takes 2 months for them, that's not a big deal, because they know with the proper foundation, they can build a skyscraper. And so they're able to suck it up for 6-8 weeks to reap the benefits, the dividends for many years, and to be able to scale and to be able to do less with the same size team, do more with the same size team. So the answer to the question more directly is anywhere from 6 to 18 weeks.
And why do you feel that you can do it so much quicker than, say, NetSuite?
The tools that we've built. So we actually like expose those tools on the front end to our clients, so they can actually, if they so wish, they could self-implement. They could, and that's where providing them with the CSV templates that they can upload the data, our tools to ingest the data, because we have clients that give us files in all different formats. It could be a PDF, it could be an Excel file, or even like a TXT file. So getting that data into our data schema is streamlined with our tools and our people and the process that I've built with my team, not just in the 3 years that we've been in business, but from my decade of experience on helping families upgrade off of systems like QuickBooks.
How about, okay, Latanya, to transfer to you. What about implementation? When you're getting a new client, how long does it take?
So it really, like Dean mentioned, it really depends on the client's willingness to send data. They can onboard within, a day, depending on how much data they send in. And some clients just don't send the data and it takes them longer. I'd say the average is a week, just to gather their information. We have tools as well. Like you can send any file, any document. We have an AI layer that analyzes, extracts data, creates assets, and then we have a team that supports it to add missing data or query the client on, questions that maybe they have another spreadsheet that has more complementing data that can be laid on top of it. Sometimes they'll only have their balance sheet, but they don't add anything in terms of like all the other documents supporting that balance sheet, P&L wise, or linking bank accounts and private investor portals. So it really depends on how the client's willingness to share their data with us. But we do see clients test it first, see what happens first, a couple hours, see, all right, cool, good. Now let's give you more data. And then it's a very self-serve, but powered by AI and our own back office team to support that process.
Gotcha. Okay. So with kind of discussing AI, and I'll keep it with Latan. So can you describe a little bit more about how you're actually using AI to help with either implementation or just any of like the daily tasks?
So we have AI on our back end and AI on our front end, right? Like I mentioned already previously, AI on the back end means analyzing, extracting data from either clients' emails or documents they've uploaded, integrating with the investor portals that do not have APIs and pulling data from there and analyzing that. And then analyzing all that data and raising insights. For example, our AI runs and monitors all the transactions in bank accounts and automatically identifies transactions, like I mentioned, and links specific transactions to specific assets and liabilities to create an automation around that process. And also, it's a learning. It keeps on learning on how to link better, how to recommend better. So that's on the back end side of the AI. On the front end side, it's the ability to interact with your data, not just using a user interface and dashboards which we also have, but also the ability to just ask questions and then cross-reference those questions with the market, learning those types of interactions with the clients to provide more insights. And then the next step is being proactive in those insights and not just be reactive in the sense of asking questions, getting a response, but be more proactive about the insights that we identify and recommendations we can raise for the family.
Gotcha. So on that aspect of the interactive part to it, when you do interact with it, is there like history that's saved so you can reference that later on?
We don't save the history, but we do give the client the ability to just query the data, but then because the algorithm has improved, the next time they ask a similar question, the answer will be better because we improve that specific query on our LLM. But it's not about, and this is still in beta, right? That whole aspect of interacting with data. We still do see clients interacting more with what they're more used to seeing, the dashboards and the user interface and drilling and slicing and dicing the data, than they are interacting with the chat-like interface. But we believe as we evolve in the future, it'll be more in that direction because we're thinking about AI more holistically and not just like reactive as it is today. More a combination between reactive insights, proactive insights to come up, but also layering on UI on top of that. So you see the graphs as well in the same interface.
Okay. All right, Dean, I mean, you have AI in your name of your company. So if you want to kind of expand on how you guys are using it, in kind of creative ways and how the client could use it.
Yeah, and first and foremost, like with or without AI, our business model, our platform makes sense for family offices. We have put AI in our name, knowing that that's where the puck is going. AI is getting smarter. There's more models. There's a lot of competition. It's getting more capable and it's getting cheaper. And so we have partnered with Microsoft Vision AI. So we've specifically picked them because we're able to use the models privately. Our clients can use that to scan in documents like invoices, for example. So AI is much more accurate than OCR technology from a decade ago, where it's actually able to pull off the details. Doesn't matter where the rows or the columns of the text is. It can lift and contextualize detail to fill out a form for you. So that's a huge win right there, is scanning invoices. Another one is algorithms to categorize bank transactions. There's a lot of patterns in how transactions get categorized to the chart of accounts, to the entity, to the family member, to the asset class. So that is a huge win, is time savings on categorization. So those are the two big areas, but also providing tools during implementation on how we take unstructured data and give it structure, and how we get it into a data schema that is standardized, normalized, and organized so that they can actually make sense of it. So implementation. There's a lot of different ways in which we're using AI, and I would say AI is really good when you tell it to focus on one task at a time, on one problem set and one data, and really like as less data sets as possible. It starts to hallucinate when you give it everything. So having it very focused on something like bill pay, like focus just on bill pay. Become an expert at bill pay. Become an expert at bank account reconciliations. Those are two very different agents that are trained on two very different data sets.
Yes, I would agree. So, and I feel this with a lot of clients, my clients too, that I hear them say like, hey, I'm not sure that I trust it yet. I'm not sure that it's going to give me what I need, or it's going to actually work properly. There's just always a little bit, right? It's new, so everyone's a little, iffy about it. So Thomas has a question for like, this industry has been, a little behind in technology. Do you feel that the family office space is ready to embrace and trust AI? We'll go with Dean if you want to start, and then we can move to Latan.
They can opt out of using our AI first and foremost. Okay. Secondly, I would say, as I mentioned, our business model makes sense with or without AI. Family offices are in a lot of pain. And when it comes to security, there's this paradox where families come to us and they say, we care a lot about security and privacy, but we're actually experts in data security and privacy. So we start asking simple questions. Okay, how are you doing things today? Oh, we've got 50 separate QuickBooks entities. All of our data is siloed. And I'm like, okay, well, what are you doing about document management? Oh, our documents are scattered across our different devices, and it's in different shared drives. Okay, so when you get down to, when you start peeling back the layers of their actual infrastructure, it's not that secure, because they're sharing files over different devices, and we help centralize the data and secure it. So I would say having an AI partner first, and that is SOC 2 Type 2 compliant, and where you're not sending your data out to a third party or a big tech firm, that's really key.
That's good. Okay, Latan, how do you feel about like family offices that seem to be a little hesitant
So
on AI?
I have a sort of a different approach to this. I think bottom line, I don't think that a lot of family offices are ready for tech in general and AI specifically. And I think it's really, it's a demographic question. If you run a family office on your own and you're in your 70s and you are afraid to put your credit card online, then the chances of you adopting technology, not to mention AI, are very, very low. And I remember 20 years ago when I'd buy things with a credit card online, and my dad was like, "What? You put your credit card on the internet? Nah, I'm not going to do that, privacy wise." And so it's a matter of them. I think the mindset. But there are family offices that maybe are run by a professional team already, not just by the family or the patriarchs, and that team is already paid for, to be more efficient, and they're usually, I don't want to categorize too much, but probably a little younger, and they need to show true value, and they're going to implement more tech, and they're going to use more AI, and at the end of the day, that's where the world is going. And we look at the multifamily office space, like, you won't survive. You will not be around in.
That's a really good point.
I'm going to exaggerate and say you will not be around in 3 to 4 to 5 years if you do not leverage AI. Like, for all of us who are not using AI on an ongoing basis, just like on our day-to-day lives, it's just like you have to. Phillips is saying 1 year, right? I'm just saying, like, and so it really depends who you're talking to. But if the question was around the SFO space, I think it really matters who's managing the family office. If it's the patriarch and in their 70s, if it's a professional team, obviously the professional team is more keen to leverage tech and AI. But it's such a personal.
That's a great concept, right? I mean, I remember 10 years ago being like, oh, all these things you could do on your phone, and people being like, why would you ever do anything on your phone? And now if I can do it on my phone, there's a good chance it's not getting done, right? So I think times change and things go, and it's moving quick too.
I just want to reiterate what Latan said about the competitiveness of the multifamily office and the RIA, which is, how do you differentiate yourself when everyone's targeting the same capital? How do you differentiate yourself? And usually it's based on service, and service is powered by technology. Mm-hmm. And then secondly, I would say for the single family offices, you're competing against each other, and your family offices are expensive to run.
Right.
A family office staff is expensive. So when you have 200 or 500 even million of assets under management, paying a large team can get very expensive very quick. So with the right technology, you can drive efficiency, and also you're competing on deals, whether that's a real estate deal or evaluating like a direct investment, like a venture capital deal. Being able to be nimble and be fast is what's going to be a competitive advantage when you're competing against large funds, professional, like.
Yeah, I agree. And I my thoughts on AI are definitely that, like, let it do the heavy lifting that it can do, right? I mean, nobody wants to do a rec, right?
No.
So let it do it, and then take your time and put it somewhere else that's like more value add, right?
Absolutely.
The analytical or the structure or something like that, right? Nobody.
You don't want to be paying your CFO $400,000 or your controller $200+ grand to be spending all their time in a spreadsheet doing bank reconciliations, or bill pay. That is just not a good use of their brain. They should be being more strategic, collaborating with the investment team and collaborating with the principals.
Yeah, I agree. Okay. So another question that came through: do you think family offices are ready to integrate like collectibles and art into wealth reporting?
Yeah.
Do you guys track? I'm sure you track those.
Mm-hmm. And we have clients we have one client who has over $1 billion of art.
Yep.
And so having their art integrated with their general ledger system is incredibly powerful, because art is kind of like a lot of other asset classes is that, you have a cost basis for that artwork, because you have insurance policies, you have storage and transportation, and the art appreciates in value over time, and you can sell it, you can gift it, you can put it into an entity or a trust. So you're wanting to track it kind of like a fixed asset or an inventory item, and it could move between other entities. So it could create an intercompany transaction. So yeah, we also have another client who has over 50 cars in their collection. And that is, that's a big chunk of money when you're talking about some pieces worth 250, 500, $1 million a car. That's a good chunk of their capital, and they want to see that. They want to see that on their books. They want to be able to see, okay, here's my book value, what I paid for it, and my cost basis, and then here's what I actually think it's worth today.
Exactly. So, we call them passion assets in our office.
I like that. I'm going to start using that.
Yeah,
they're not just passion assets, though, Cori. They're actually assets. Like these are investable.
For sure.
People, and also art. Art.
Absolutely.
Not there's physical art, but there's also digital art. like, and people are investing in like also shares like Master with all these like platforms for buying art as well. So it doesn't really matter if it's an asset or not. It needs to be part of the portfolio, I think.
Yes.
For sure.
I agree. Like, the whole point of the family is like, what's their total picture of their net worth, right? And that 100% is part of it. And so whatever their reason that they have for collecting the art or the cars or the shoes or anything else, they can, I feel like it should be part of their report.
We had a client come to us with a huge collection of baseball cards. And this is a $1 billion plus family that has a significant amount of money in baseball cards.
I know, it's wild. It's kind of fun to see that. So time is running short, and so just kind of the last question I just wanted to go over was your vision and future outlook on it, with your platform. So if both of you just expand on what is on your short-term roadmap in the next 6 to 12 months, what are you most excited for that's happening in your software? So Latan, if you want to start.
Yeah, I'll kick it off. Sure. I mean, for us, it's being more proactive on the insights, using more proactive AI, like I mentioned. So tapping into all these different data sources and raising opportunities, issues that need to be taken care of. Volatility in the market, how other people have responded, how you should respond, people to talk with, advisors you should catch up with, or other asset managers. The idea is, to not just be able to tap into all the data sources and give nice dashboards, but to bring proactive insights based on all that data, so that people can make better decisions, either they're preserving their wealth or looking to increase it.
And where would you say, Vyzer's headed in the next 5 years? On top of that,
that's a big question. But I mean, the idea is to be a full family's operating system.
Okay.
Is where we're going.
So when you say that, to cover all their books of record, is that where you're headed?
Either if we do it our own or we integrate with other softwares, Dean and I have been in touch for a while. If we don't have to build it, but we can integrate it and create a seamless experience for the client, we might want to do that. But the idea is to do that, to be that operating system, both for the single families, the individuals, and for the advisors.
Gotcha. This is one spot.
And I actually think the business for the advisories and the MFOs is going to be, where we really grow. because we've been serving the individuals that they serve directly for the past couple of years, and we're doing it really well. And we can really, grow their businesses exponentially because of that data that we've learned on.
Gotcha. Dean, how about you? What's next, for Asseta in the next 6 to 12 months?
We're in a very interesting time. Right now, over 100 trillion is transferring hands over the next decade. And at the same time, CPAs are retiring. 75% of CPAs are going to retire within the next 10 years. So there's a lot of trends that are happening right now that are impacting the family office space, and specifically in accounting. Our 3 to 5 year vision is to be the operating system for global wealth. So integrating accounting, investment performance, compliance, and then have AI-driven insights in one secure platform. Fewer siloed tools, and helping our families unify their data, automate complexity, deliver clarity to decision makers. And we're doing that very fast. And our message is resonating. We've grown over 1,600% year over year. We're doing bi-weekly minor releases with quarterly major updates. So some of the new modules that we're really excited about: document management, bill pay, and our Adapar integration. So there's a lot of exciting stuff that's coming out weekly, and a lot of exciting stuff that's coming out this quarter. And I look forward to connecting with everybody that had a chance to sit in on today's session.
Yes. Well, thank you both very much. It's been really fun to kind of hear, your perspectives and how technology is changing and where it's going. Any other questions you want to answer? I can turn it back over to Adriana to kind of wrap things up.
Thank you, Cori. Thanks, Phil. Glad you're back as well. Thanks to everybody for joining today. Cori, great moderating. I think it was really interactive, and thank you for all the questions, and Latan and Dean for answering all this. I think it shows an interest in a new GL system and alternatives to Adapar. So on that note, I'm excited to share that we will be soon launching peer groups where we can continue these conversations and exchange, share ideas and exchange thoughts. So stay tuned for details. Phil, can I pass over to you?
Cori, great job. What an interactive session with lots of chat, lots of things. Dean and Latan, you could see the interest that people have in something new. They're sick of what they have in the past and want something better. And my own comment is, if you want to be a world-class single-family office, you have to look like a multifamily office. And if you look like a multifamily office for multiple generations, you got to be thinking about what Dean and Latan said. Great insights. Thank you so much.
Thank you, Phil, for having us, and Adriana for helping organize this, and Cori for moderating it.
Absolutely.
Thank you, everyone. Appreciate it.
Thank you.
Thanks, all. We'll see you
Bye-bye.
soon.
Thank you.
Enjoy the rest of the summer.
Yeah.
Bye.